Hello, everyone. This is Dr. Duru from Ahan Analytics with the Market Breadth. I apologize for the lighting. I'm on the move, but I wanted to make sure to post at least very quickly because this was a crazy start to the trading week. As usual, I start with a snapshot in time. This is Yahoo Finance. You can see all the major headlines. Excuse me, the major headline that is missing is what caused this 7 minute 2.5 trillion stock rally that confounds wary investors. Well, what happened was there was a big rumor that tariffs, that Trump was considering putting a 90-day delay on tariffs. Now, for those of you who read my blog, you would have known that if this rumor had been true, it would fall into the category of what we typically expect in financial markets, which is when the financial markets panic, when they start collapsing and selling off sharply, the politicians and the policymakers and the government starts to panic. And that's when markets will typically bottom because they know action is going to be taken to put a floor under the market. So that's why we had this very sharp rally with people racing ahead of expectations. Now, I was surprised at the sharpness of the rally because we've seen these delays before, and at the end of these delays, the tariffs still come. So anyway, a lot of great headlines here. There's some things I'm going to read tonight, as usual. You could see here that right now stock futures are up. It's probably going to be turnaround Tuesday to some extent. But the main headline here is that the market had a very wild swing. But the net result, interestingly enough, and I'm going to go over to my favorite technical indicator, the percent of stocks trading above the 50-day moving average, is that it did not have a wide range. That really surprised me, given what we saw in the stock market. And not only that, but we reached a yet a new extreme low. So we're the third oversold day. So this being the third oversold day is already extreme, getting extreme in duration. And now we're extreme in how low this is, 7.1%. It hasn't been this low since the pandemic sell-off. And I think maybe this may be below. I'm not going to go there right now because I'm trying to get through this quickly. The percentage of stocks trading above their 200-day moving averages also fell to new lows, down to 17.4%. So this is important context for some of the charts that I want to show you. And I'll lead it off. Let me switch to logarithmic. I'll lead it off by showing one of my favorite AI stocks, which is Vertiv Holdings. I have a sizable holding here now, and it turned in what's called a bullish engulfing pattern. You could see a lot of heavy volume these during the sell-off compared to back here. Now, what is a bullish engulfing pattern? Well, it's when a stock gaps down below the previous day's low, but then closes above the previous day's high. I think a bullish engulfing pattern is strongest when those brackets are below and above the intraday high of the previous trading day. And that's what happened with Vertiv. Vertiv actually also gained 7.4% on the day, which adds even more strength to this bullish signal. The other thing I want to point out is that this is great outperformance on a day where all the indices either close flat or slightly down. Okay, so this is more important context to what I'm about to show you. So let me go to Swing Trade Bot. So once I saw this bullish engulfing pattern, I said, oh, I wonder if Swing Trade Bot is going to tell me that there were a lot of bullish engulfing patterns in the market, because that would suggest a bottom. Oh, right. The thing I forgot to add is that when the bullish engulfing happens at the during a downtrend, it suggests that the downtrend has finally exhausted itself. So that's why it's very important. So what we need is confirmation, a close above today's close for confirmation, and then a close below today's low invalidates the move. Okay, so it's very simple. You have a very simple confirmation point, very simple stop loss point. So I went to Swing Trade Bot. This is a stock scan tool that I really like, and I'm subscribed to it. And I did not see bullish engulfing. If you could see here for all the indices, bullish engulfing is not one of the key patterns on the day. And in fact, most of them are bearish. So that's very discouraging. You can see all red for all the trends, of course, and only the NASDAQ gained slightly. Everybody else was down slightly. Russell was down the most. So this is why market breadth failed to make any progress. So then I went further down here just to confirm. Yeah, look, there weren't any new highs at all, essentially. New lows dominated 432, and the bearish signals dominated over the bullish signals. So undeterred, I went ahead and said, okay, well, let me just go over to Vertiv on Swing Trade Bot, just confirm that Swing Trade Bot is also sees what I see, and sure enough, it did. Bullish engulfing. So then I went from here, clicked on the bullish engulfing so that I could see, well, what other stocks hit this? And I was encouraged to see that actually there's 7 pages of stocks here. I won't go through all of these. But what I did in preparation for this video was to scan, take a look at the charts for all of these bullish engulfing patterns. The ones that I like the most, I put into my bullish swing stock shopping list. And now you can take a look at all of the stocks that are at the top of my list. Not all of these were bullish engulfing. I will show you really quickly which ones were. But this is my very short shopping list for now. These are not recommendations, mind you. I'm just showing you what is on my mind and what is in my trading strategy. Please use your own trading rules. Use your own research and keep in mind your own time horizon for both trading and investing and your risk tolerance. Okay. All right, so let's take a look. So Swing Trade Bot allows you to swing to hover the cursor over this chart to get a quick look. So ACLS is a semiconductor company, was on the list. I don't like this as much because you notice here that the downtrend is very sharp. So this is a very high stakes setup. Cohere I like a little bit better. I think this is a fiber optics company. But again, sharp downtrend. But I like it a little bit better in terms of the setup. That's Credo is not, actually, no, it was a bullish engulfing. It's been on my bullish list for a while. I've tried some call spreads that didn't work on this one. Dash is one of the ones I really like. Now you can't see it on this chart, so I'm going to swing back to Trading View to show you why Dash is particularly impressive. Look at this. Not only did it hit bullish engulfing, but it also at the lows at the open today, it hit right at the 200-day moving average support. I love these picture perfect setups. Dash gets a big green flag in my book. Okay, Dollar General, I've talked about this one before. It's not a bullish engulfing, but check it out. It's holding the 200-day moving average breakout. Sorry, it's hard to see in this chart. Dollar Tree was a surprise. It was up, what was it up? 7.8% today. Let me go to the chart and see. Yeah, so it's still under the 200-day moving average. So it's on my shopping list more as a watch and see. Docs was a bullish engulfing stock. Flex, I really like this one. Let me go over to TradingView so it's easier to see. I really like Flex because it is so oversold that it didn't even close. It still closed below the lower Bollinger Band. So I think this low gives me much more confidence. Now notice it's kind of a tie here. Not quite as clean as I'd like, but still, it's very impressive. The wide range is a little troubling, of course, because an invalidation could cause a big loss. So I will size accordingly. So I have to have a smaller trading size if I go for that stock. Fortinet, I like this one just as a cybersecurity play. I've talked about gold before. I won't talk about it here. KKR is a good one just because it's in the financial area and with M&A. Let's actually go to KKR. I like this for a bounce towards this converged 50-day and 200-day moving average resistance. Let's keep going. Mossy. Oh, I forgot to look up what company this is. So most of the time, I know what these companies do. Unfortunately, I can't tell you what Mossy does, but I really like the setup for the bullish engulfing. Meta, everybody knows Meta, the former Facebook. Given this is a big cap tech, that should be a relatively lower risk way to play a bullish engulfing pattern. I'll skip over materials, this rare earths play. Netflix. Netflix is another one, just like Dash. Check this out. Netflix, not picture perfect like Dash, but it came close to 200-day moving average. And it's not a bullish engulfing play. But I do like the way that the buyers decided to try to defend the 200-day moving average. And of course, as you saw with the market breadth technical indicator, Netflix is one of the few stocks along with Dash that are still above the 200-day moving averages. So they're both in very rare air territory. NVT, an electronics company, I had to look this company up. I didn't know about them. I really love their business. I encourage you, if this interests you, to check out their business first. They do electrical cabling that's important for data centers and so on across the globe, actually. So there is, of course, that global trade risk. Okta, I've talked about, it's not a bullish engulfing pattern, but I do think it's been a baby that's been thrown out the bathwater, meaning that too many people have thrown this out and forgotten about the great results the company had earlier. And then US Steel came up on my list, not because of bullish engulfing, but because look at this move. I mean, when I looked at it, it was up 7% and I thought it was too much. It closed the day at with a 16% gain. Perfect bounce off 200-day moving average support. It, of course, is still stuck in this trading range, but X is proving to be a very good buy the dip kind of play. So that's why it's on my radar. Okay, so those are the individual stocks. Let's now end with the indices. S&P 500, you can see the wide range, the trillions of dollars that traded today. Um, the rumor that went out today was curiously timed for this big momentous test and break of the conventional definition of a bear market, which is 20% off the all-time high. The buyers still, despite the rumor being called fake news, buyers still kept buying into the index and almost closed the gap for a minimal 0.2% loss. So buyers saved the S&P 500 from a bear market. And as I've discussed in my blog, typically once the last of the major indices hits a bear market, the selling is close is beginning to end. Sorry, the selling is close to the end. It's no guarantee, of course, but bear market is an extreme trading condition. It is not the start of something worse. It is usually the start of some sort of bottom. And of course, earlier in this video, I was making the case that some sort of bottom is happening with a few stocks, and that's what we call green shoots. The NASDAQ also was curious in that it dove well below wow. Actually, I hadn't appreciated this before. It got all the way to 15,000. Note that I thought originally that this would be the downside risk target on the NASDAQ. So it got down to 15,000 today before it closed essentially flat, fractional gain, 0.1%. Let's take a look at where the NASDAQ last traded, 15,000. That's all the way back at the beginning of January. So that means the NASDAQ erased a full year of gains and then some. That is pretty extreme. Let's remember this as a big moment when sometime in the future, whether it's a year or 2 years away, we can look back and just in awe that we weren't mortgaging the farm to buy the Nasdaq. That's pretty incredible. Of course, I'm not suggesting anyone do that. I'm just saying that at some point one day in the future, we're going to look back and really see how deeply oversold the Nasdaq was in this moment in time. And then finally, the small caps, it they still lost almost 1%. They're a large part of why there was no gain in market breadth. I believe if I can scroll it up, you can see it a little bit better. You can see that the pre-pandemic high is beckoning for small caps, IWM, and it looks like it's going to get there given this persistent weakness. Finally, let's look at the VIX. The VIX is the last thing here on the list. And it tested the last high, which was from August, which is great in terms of confirming a potential bottom, but the subsequent fade or volatility implosion was not complete. The VIX still ended up positive. So that is the kink, the big kink in the chink, sorry, in the armor, which suggests that we can't quite be confident in whatever kind of bottoming is underway. Maybe a few stocks, but not the market in general. What I want to see is a volatility implosion where we finally get a negative day or get below this previous high. If you need more details on this, again, go to my blog, drduru.com/122 /blog, all letters, and you can get more details. In the meantime, please share this content so the algorithms know that this is content other people need to see. Subscribe to this channel if you want more video, and you can also subscribe for free to my blog if you want more written details. Stay safe out there, everyone. Thanks for checking out the video, and see you the next time.